So, you guys, I just hope there's not too much noise in my area because I feel like all my sound system are so like you can hear noise sound coming from an extreme far location to my side, and I don't know why. So any sound system I'm using from my phones to my iPad to my system to my mic when I'm having a class, they all happen that way, right? So we are going to go directly into the chat. So if you remember yesterday, the video I dropped, like I said, everybody must go through the video. What we talked about was if you have a daily key level or a weekly key level, let's use a weekly for now. When you have a weekly key level right here, now your market is going to approach it. If the market gives us a type 1 break on the daily, which is the one we would like to see, then our first line we pay attention to is this QM. If there is, then what's this apex? And I said, I made some incredible statement. I said, if this QM is fresh on the daily and it's fresh on the H4, then you just refine it inside this box and you take your entry from there directly. If this one is fresh, also you take your entry from here. But if this is fresh, you don't need to pay attention to the apex, you take your entry from here. Also, if this and this are all on fresh, then you can take your entry from the remaining fresh key level there, which I explained clearly on the video. You guys can go ahead and watch. That's what I explained. Now, the question here is, what if the market did not come to this place? Okay, what if the market comes to this place and you are contemplating which one to use? Okay, that's what brought about the entire models I am talking about. Model 1, 2, 3, and 4. Then finally, we're going to talk about KLR. Simple. Now, if we have a daily reject daily, something like this, I'll delete. Let's talk about them, go slowly so you understand the entire thing, the entire idea behind how I execute. Now, let's talk about model 1, which is very simple. I don't know if this cat is disturbing you guys, but it's still crying. Okay, it's still very much crying. So this is basically model 1. And model 1 is talking about what? When a storyline starts. Now let's use our normal daily key level because I'm an intraday trader. Now there's a H4 breakout right here. So I'll mark it out also for your benefit. H4 breakout. Now you're going to have some certain key levels, and I've told you the most primary key level you pay attention to. Now this is a QM. I'll signify QM. There's an apex. I'll signify A-shaped apex, A-shaped key level, right? A-shaped key level. Then sometimes you're going to have this as OCL. So I've already given you guys all the entire scenario that you're going to pay attention to. If it's an apex, a QM, I've given you guys scenario 1. If this and this have been mitigated, automatically execute from this. You don't have to stretch yourself. If this and this and this have all not been mitigated, you don't have any business with the OCL. You pay attention to QM and Apex. If QM is fresh on the lower time frame, you refine, it's cool, use it, don't pay attention to this. But then now, what if you are contemplating which one to use? What if you are contemplating which one is going to hold? Right? That's what brought about model 1 and model 5. Now, I'm going to be blending model 1 and 5. And then as we move further, I'll talk about all of them within this small diagram. Now, what do you do? This is a H4 OCL, there's a H4 QM, and there's a H4 A-shaped key level. Now, immediately you have this, you wait. Wait for the market to start pulling back. Tap on either this, or this. If the market reach this, what do? Switch to the 15 minutes time frame and look out for a breakout type 1. If the market did not give you a breakout, push to the QM. If the market gives you a breakout on the QM, then you are good. Where do you execute from again on the 15 minutes time frame? You execute from the QM or the apex also. The same thing. Okay, this is all about model 1. Now, why model 1 is very interesting is that now what if the market refuse to come to any of the apexes, refuse to come back to this place? Still, if the market decides to come right here into the RBS, which we don't like using, you still look out for a 15-minute breakout. because sometimes the market is not going back, coming back to the OCL to the QM on the A shape, and it usually doesn't come back. It comes back twice a month. That's why you need the models. And then you can automatically execute from here to take out the continuation so that you can end the entire raise of the daily key level, which is it right here. Okay, that is what brought about model one. You take it 15-minute breakout right here. This is the 15-minute chart, and then you can execute from the QM or from the apex on the 15-minute chart. That is model one. Now, model five. Model five is RBS on the 15 minutes or 30 minutes time frame that immediately got created and then disrespected. It also should happen after the market has entered the H4 key level, after the market has entered any of the H4 key levels, the QM, this, and anyone. It's just like model one, but this one, market will create an RBS quickly. The next candle should mitigate it. Preferably, immediately the next candle comes, we want to see it mitigated, maximum 2 candles after, then the market is quickly, clearly going to come back into it right here, boom, and it's going to use it to sell. You don't need to hold for too long when it comes to that model 5, but it's very, very powerful. I showed you a lot of it last week, and I showed you an example right here. If you remember, when the market came into this zone right here on this RBS that got tested, market came into this OCL that got tested, I'm sorry. The market did not, because at this point, for the market to give us a breakout type 1, look at, the market would have to break here. And our TP we are looking at is even here. So what I quickly did was pay attention to that. What the market did was give us the first entry. RBS got disrespected. Come into it. The market did not take out your SL. You can see this is the first one that got created. Second one that got created again was this one. Market came back into it. Still use it right on the 15 minutes chart. You can also use the 30 minutes. If the market hits your stop loss, fine and good. Just quickly move. It's cool. Market created another one right here on the 30 minutes. Did the market come to your stop loss above here? No. Used it, sell again. Market created another one, and this one was the perfect one. Use it, sell heavily, boom. And then came straight to TP. It's like, cool, you see? So this is basically, right? This is basically, use the 30 or the 15 minutes time frame. This is basically the entire idea behind model 1 and model 5. They are used like confirmation entries where all you need is just go straight to the point and look at what it is about. Very simple. It's because the market is not likely to come back. That's the truth. If the market even comes back, if you are used to using model 1 and 5, you can use them as confirmation entry and you make your money. Right? Now, quickly, now what if the market aggressively breaks? That's what is bringing us to model 2. And that's how we use all of them. In model 2, what do we do? Now, you have this zone. Yes, you have this zone. These are your top priority zones for instant execution. And I've given you guys scenario 1 in yesterday's video. I told everybody to watch. Scenario 1 says if OCL, you use 3 zones. You use OCL, QM, and the extreme key level, which is the apex. Now, if these two have been mitigated, you execute directly from the OCL or from the available fresh key level, right? I gave a scenario in the video. And if QM is fresh, A is fresh, OCL is fresh, you don't care about OCL. Don't watch the OCL. You pay attention to the QM, you box it out. Check. Is it fresh on the 1 hour time frame? If it's fresh, you can use the QM, don't bother about the A-shaped key level. Now, what if you're not, you are a type of person that contemplates a lot, or this and that, apart from the entire approach? What do? Play one of the models. Clearly play one of the models. You can play model 1, you can play model 5. Those ones are like together. That's why I made them in form of confirmation. You get. Now, what if the market is so aggressive? Right here, we're going to have a week. This is a 4-hour week, or let's say the market is so aggressive, this is like a 4-hour swing low, and the market just quickly reclaimed this H4 key level, did not give us a 15-minute breakout, drop down heavily right here. The market dropped down heavily right here. What's good? This is the H4 swing low that got disrespected. What do you pay attention to? Go to the lower time frame, look out for something like this, right? Market create liquidity for you right here. We have a fair value gap on the lower time frame and the higher time frame. There must be a gap right there due to that aggressive drop. Then you use this to execute and target the recent swing low. So regardless of how the market is moving, one of the model is going to help you execute because a storyline can start and end without coming to the origin of the storyline, which is around here, right? You would use this and take the continuation based on what? Model 2. Simple. Based on model 2, you use this to enter the chart. If the market is aggressively moving, the market can still decide not to create what you want. Let it go. It's not by force. Okay? Let it go. It is not by force. But as far as the storyline is going to start, before the storyline ends, if you understand what you are doing, at least you need to catch 3 trades based on the models. So that's about model 1, 2, and model 5. Now let's talk about model 3 and 4. Now, model 3 is one of the highest probability entry that I don't need confirmation, me personally, and I'll tell you why. Now, in model 3, the market is going to drop aggressively and the market is going to drop a single candle. Now, since we are dropping, I'll draw a bullish candle where the market is going to create a bullish candle right there because it's going to be a bullish one because we are dropping down. Then the market is going to have a fair value gap below here. So there's going to be an FVG right here. Even after the market did this drop, take out the external liquidity. The market has not changed storyline. The market is still bearish. And then the market started sluggishly moving up like this. Now, the RBS here, if it is overlapping with a higher time frame key level, like the H4 OCL, let's say it's an RBS on the H1, let's say RBS on H1, OCL on H4, and let's say, even if it's okay like this, it's very okay, then there's a high probability sell model 4. You don't need model 3. You don't need any extra gra. No, you don't. You don't need any extra gra. As far as the OCL on H4, RBS on H1, or it just have to be a key level, the same key level that is on H4, it's on H1. If it's on the daily, it's also cool. But if you see the formation of this, the market can still come back. Then use this model 3 to sell. This model 3 is just a single candle that has a fair value gap below it. The market is going to use it and appreciate the sell. Pay attention to this also. The market can decide to destroy this and still come back to all these zones. That's why it's very good to know model 1 and 5. You can both use them as confirmation if you are unsure. And then finally, the model 4 we're talking about. Now, the model 4 is the one that is confusing people, but it's not supposed to. Model 4 is just talking about whenever the market breaks a structure like this, right? Let's say the market breaks a structure. Let's say this is a break of structure. Why am I writing it in full? Let's say this is a break of structure, right? Now, this origin of this entire break of structure, which can come from either the QM right here, or the apex also, which are the point of execution, highest probability point of execution, right? Now, if these two zones, right, are like this, what you do is you still pay attention to the H4 time frame. The 15 minutes time frame, or the 5 minutes, or the 30 minutes is where you want to see the break of structure like that. Now, what you want to see in the 4-hour time frame is just like this. It dropped to the downside. It dropped to the downside. And then you're looking out for this OCL. This should be this zone or this zone. Then you want the next candle to open, pull back, and tag you from the origin of the break of structure like this, and then sell. This is what you're looking at. It's a continuation entry. You get? This is what you want to see on the H4 time frame in form of continuation, and this is what you want to see on the 15 minutes time frame, breaking the structure, coming to the origin of the structure. This pullback to come to this OCL is going to be the entire pullback to come to this zone and then sell down. Now, this is the entire thing I want to make sense and give 2026. That is the entire thing. I don't want to stress anybody, and I don't want people to focus on high RR. I don't want anybody to stress themselves. I don't want anybody to have too much on their head. Now, let's say you understand model 1 to 5, right? This is the entire diagram. I gave out model 1, 2, 3, 4, and 5. Now, let's say in form of a confirmation entry, this is what I have to talk about. In form of a confirmation entry, we have where the market creates a CRT on the H1 time frame, right? I also like that one. The market will come and give you a CRT on the H1 time frame. This candle drops. Um, this candle like this. Okay. If the market gives you this type of CRT on the H1 time frame, I am looking forward to using this zone. If the market hits my high time frame key level, I also use this type of confirmation. If I have the formation of the CRT before, but I want it that immediately the next candle opens, it should tag. If it doesn't tag, I'll cancel my limit order. Immediately the next candle open like this. I don't want it to drop. No, I want it to come up first, tag me in, and then it will sell. Continue to the direction. I use it as a confirmation entry too. If you look at my chart, I know you also see going to see a lot of this. Okay, or something like this. It's also a confirmation entry. You can use it like in form of model 1 or model 5. Makes a whole lot of sense. So these are the things you're going to be looking on the chart if you want to execute. Rule number 1, I'm not after high RR. I'm after giving information that works, that will make people make a whole lot of money this year, give them opportunity to park account just like I do, reach max allocation just like I've done, right? With different firms. So basically, let's go back into the chart right now and let's see. This is the information I have for you guys this year. After this class, like I said, use video doctor system, the one I named doctor system 1 yesterday, and these 2 videos. Then watch the model. This video is what you need 2026. Then go into your chart back test. Every day you come mark a level. Enter. Even if it's 1:2, you secure. Calm down. Just calm down. Okay. So this is the entire thing we talked about. So I'll name it models 1 to 5. So based on the name of the class is Doctor System 2, like this. Right? So this is it. And this is the entire thing we discussed today. Make a lot of sense. Right? Okay, now let's come into the chart. Let's establish a storyline and let's see what we can do with it. Now, this is gold. You know, one thing about me is gold is one of my favorite pairs. So there is a type of entry that I want to teach you guys, but I'll see when I can start talking about it very soon. Now, let's come into the previous price actions. Let's look at like previous price action, right? Now, you all know the criteria of whenever you want to enter the market, I want you to be overlapping with the higher time frame level. For example, if you have a daily storyline, let's come back into this. If you have a daily storyline like we do have here, there's a 4-hour breakout or any one of the breakouts. Now, after the breakouts, each cell you want to take, since you're on a daily storyline, you want to see it overlapping with the H4 key level. Don't forget, that's why model 4 is within the H4 key level too, you can see. So each cell you want to take, you want to see it overlapping with H4 key level, except in cases of SLE, which is model 2, or confirmation entries, right? But still they have to go to H4 key level. Because anytime you are on that zone, that's what you want to see. Now let's try to establish a storyline around here, and let's see what the market has for us. Okay. Now, before the market started pushing up right here, if we all notice, we see that the market come into this particular zone right here, right? The market came back into this OCL. After tapping on this OCL, we go into the H4, the H1 time frame. Anyone we can get on the H4, the H1 time frame, right? So we have the daily reject daily. Then we have the H4 type 2 breakout. Let's use this. Now, after this H4 type 2 breakout, what did I tell you all? Let's do. Now, the first thing you do when you come into the chart is mark out this, box it or mark it out. Do anything you want to do with it. When you box this out, like I'm giving you guys the mentorship I want to give this entire year. When you box this thing out, you mark it here. Do you have a QM? Come into the line chart and check. Is this one right here a QM? Yeah, it is supposed to be, but this is not the type of QM I'm looking for, right? So this time around, you have only Apex. And remember, you have what? What's this? RBS. Now, the first thing I said, always mark the QM and the apex. Now we're paying attention to this and we're going back to the H1 time frame to refine it, to make sure that it's also fresh on the H1 time frame. So on the H1 time frame, it is not fresh. Now, if it is not fresh on the H1 time frame, what do? You can go to the 30 or 45 minutes time frame to look for a fresh zone around there within this box. If there is no fresh zone within this box, use 50% of it. Have I mentioned this thing before? Yes, okay, then you can use 50% of it. Okay, or if you want to be on the safer side, you can just let it be. All right, very beautiful. You can see how 50% of it is here and the apex is right here. So you can decide to use the apex right here. Now, this is going to be your entire origin entry. And look at what happened, right? Now, before then, listening to all the information I'm giving you, this is a H4 key level, overlapping H4 key level, right? Market came, you were unsure. You want to play model one inside this zone because you're looking for an entry that's going to give you what you want. What happened? Market come, H4 reject H4, 15-minute breakout type one. And you, if the wick is too long too, you can decide to use 50% of it. If it is not too long for you, you can use it just like that. Okay. Not always an engulfing candle, do what you want with it. So if you want to use 50% of it, this is going to be your first entry. Now, the information I want to give you guys here is that this an entry, if you remember, you are going to the external liquidity. Anytime the markets use the RBS and go, you don't want to hold the trade for a very long time. The ones that you want to hold or swing is that the one that the market respect the QM or the apex. But anyone the RBS, you look for a model. Look for a model within there, take out the external liquidity. So now if the week is too long, you can use 50%, or you can still use here if you don't want to miss entry. So this is an entry after the storyline has started. Now let's still go to the H4 time frame and let's look at what the H4 time frame is doing around that particular zone. Now, H4 came, gave us a lot of things. Now, if you're using timing, you pay attention that at night, by 8, look at it, 8 o'clock at night, the market dropped down. That's why I said every single time there is going to be a time where the market is going to what? Listen, every single time there's going to be where the market is going to retrace. And that retracement doesn't come in our trading time. I mean, it's if the market is going to do bullshit, it doesn't come in your trading time. And that's why I have a time I trade. This 8 o'clock at night, the market dropped down. But are we still bullish? No. Why did I stop being bullish at that particular time? Now listen to me. I stopped being bullish at that particular time when I have this above here and when I have the break below here and the market break here. So I was looking forward to the market to sell until the market takes out this low. And then it can continue the bullish storyline from this entire zone. Then that is when I have this. When the market gives me the sweep and the break, I have what? What do I have? I have a bearish storyline short term because on the daily, the market did not reject any key level. You see, the market is not rejecting from anything. I was just using it to develop idea. Now I still come back to the H4 time frame. After seeing that now, what is the first thing you are going to do? You guys should tell me again. The first thing you're going to do is since you have a sweep and a breakout, you are very short term, you're going to mark the QM and the what? And the apex. These are the two things I told you to do. Now, you're not going to mark it, you're going to box it out. So you're going to, so that you're going to look for a refinement inside, box it out like this. Cool. Box it out like this. Cool. What do? You go into the 1 hour time frame for refinement quickly. When you come into the 1 hour time frame, what can you see? You can see this zone right here. There is a refinement inside which is fresh. Look at this zone inside here. There's a refinement inside as an engulfing cell, which is also what? Fresh. So I'll delete this one. Now, immediately inside this zone, you see a model 3 clean inside this zone. You don't have to stress yourself or start stressing yourself based on confirmation or anything. You don't. This is a sell for you. Okay, now you don't trust the zone. Market came into the zone. What do? Go to the 15 minutes time frame ASAP. What are you looking for in the 15 minutes time frame? Any of the model that can present itself. Market came into this zone. Which model can you see? Look at this. RBS quickly created model 5. Market quickly come back into the RBS. Look at it. Pew. Place your stop loss above here, and market started what? Dropping. And then the drop came until the market took out this external liquidity. Now, this sweep and break is a short-term idea of executing a trade. It's not an idea that you hold forever. Okay? It's a short-term idea that is telling you that we are short-term bullish or short-term bearish. Unless the market rejects from a certain key level and breaks out, you are moving to one direction regardless of the number of breakouts that happen. Okay, so then the market still came back and now trade the original apex. That's why I say if the market respect OCL and go, as far as the storyline did not reject from the storyline did not end, that apex and your QM are still active. they are very much active, the market can still come back to that zone. So that's why I use model 1 here, plays out. Took a sell here, play out. Okay. Then within this zone, we are bearish until the market take out this zone. Look at what happened on the H4 time frame. It's a form of model. It is a form of model 4, but it looks somehow, right? How did it look? It looks in such a way that this candle closed below this OCL we are already selling. Then we expect the market to pull back. Don't forget, pull back first before taking out this low. It pulled back. Don't forget, before it take out that low. At least you should pull back to this OCL that got disrespected or this apex. Now, when I came into the H1 time frame and look at the OCL that got disrespected right there, remember this trade I posted. So that's when I saw this. This is the OCL that got disrespected, and I refine it into this engulfing sell candle. Why? Because if you come to like the 15 minutes time frame, don't forget, you're going to see that there's a break of structure right there. Then I use the origin of the break of structure to take that particular trade. And that's why I had a fantastic move. There's a break of structure right here. Look at it. And this is the origin of that break of structure. Use this, take the sell again, model 4. Now, within this zone, just look at gold a little. You look at model 1 played out right here. We are bullish bias. Temporary bearish bias, model 3 played out. Confirmation, model 5. Model 4 inside this place. And then the entire SLK structure came back, was respected. And then, boom, we went back until we ended that entire storyline right here. How many trades should you have executed in an entire week? And tell me how many of these trades I sent this one to the group. This was the only one that I did not execute. This was the only one. But I even sent it because that day I took one from here, remember? Took one from here. So I've already won like 1:12 R already. I don't need to like execute on this. Okay, this one also. So all the information I'm giving you is what I'm going to be sharing this year. Yes. Do you need structure? No. You just need to think. Do you need candlestick structure? No. It takes a lot of time for me to substitute a lot of things and make things way easier. A lot of studying of the chart so that I don't want people to start. So if you just look at model 3, automatically it comes with liquidity, like I said. It automatically comes with liquidity. And why it comes with liquidity is because right now I just told you to use QM and apexes. So before the market comes back to QM or apex, automatically liquidity must have been created. So you don't need to stress yourself on liquidity. You don't need to stress yourself on get it. Liquidity will always be there. That's why I said it's going to be there on its own. Okay, so this is now me using the entire model within one specific price action, and you see how it plays out. Sincerely speaking, like I said, I don't really know how it works on all other pairs. You have to do it yourself. But we'll check right now in the remaining time we have. I'll try to use GBP USD. I'll try to use GBP USD on the daily time frame. Let's see. So let's take a look at the recent price action, or should we use a previous price action? No, let's take a look at the recent price action right here and why it is buying. So GBP USD came, dropped down. I don't know, is it reacting from this key level? Of course, the market reacted from this key level on the daily time frame. So on the daily time frame, we have this, right? After the rejection, we are going to be bullish until the market comes into this zone, right? Or at least sometimes you can just use your brain. Like market hardly just let's just say the market will buy into this zone, then you can come into the H4 time frame. Now, the H4 time frame, you don't really have a breakout just yet. So you can use what? The H1 time frame. You are looking for a breakout type 1. So the market still did not break out type 1. So you're not going to be considering this. Sincerely, I'm not going to be looking out for this. So let's change the pair. Except if you're going to establish a H4 storyline. This one too is not looking nice. But I know the price action is USD that's why I don't want to use it. But let's go. I don't want to use it because I know the price action of it. So let's say the storyline has already started. This is what I want to do now. Let's say a storyline has already started. Let's establish a storyline around here so we can see how the models are playing out. Don't forget, yesterday I used this for example of model 1 and model 2 and everything. So now let's say a storyline has started around this because you take a look, this candle open, come down first, rejected from here, or you can take a lower rejection if you want to mark out zones like this. Rejected from here. Can you see it? rejected from here. After the rejection, you go into the H4 time frame and you're looking forward for a breakout. Now, listen attentively. You're looking for the market to break out above here, not even here. You're looking for the market to break out above here. Immediately the market breakout. What are the things I told you to do first? Box the QM, box the apex. The market is going to, if the market comes back to any of this, it's a swing. It's you to hold. Catch up, no allow and go, just pull down. Okay. So you're going into the 1 hour time frame to like check any of them that is readily available for this. Now, inside this box, you have a fresh H1. Inside this, you have a fresh H1 too. So inside this box, you have a H1 right here. But the markets have already come and even disrespected it again. So I'm not like very interested in this. So I can delete this. So inside this box, I have also two H1 key levels. I'm not interested in the QM, right? I'm interested in this engulfing buy and what this engulfing buy. So depending on the one you want to use, they are within the range. So you can use any one. So preferably, if you don't want to miss entry, you can decide to use this particular one. The way the market comes back into it and then what's created liquidity for that zone. This is it. Now, let's go into the H4 time frame and start looking. Now, on this particular H4 time frame, look at the market has already come back before and used this OCL that got disrespected. These are the ideas I'm telling you about. The market is going to come back for some time. Coming back into this, you can try to establish an idea around there to capitalize on that little move. But that doesn't mean you should hold that entire move. Now, let's take a look at this and let's be sincere. Market came. Did the market break out on the 15 minutes time frame right here? Yes. The market break out on the 15 minutes time frame. But the market has already mitigated this zone. So we would want to use this apex. So depending on how you place your stop loss, the market is going to take you out right here. The market is definitely going to take you out right here. Now, after the market has taken you out right here, you are now still going to be looking for further confirmations if you want to still execute off of that particular zone, right? But then one thing is pay attention. Anytime the market rejects, you wait for candle to close first before you execute on that particular trade. So if you wait for H4 candle to close, right? I'm coming. Yeah, you wait for H4 candle to close. You wait for H4 candle to close before you take a trade around that zone. Okay. But like you can see, this is where the original entry came from. Now look at this little zone. Let's look at this. One bullish candle, two bullish candle, three bullish candle. Created this OCL. Model 4 is trying to play out right here. Market came back into the OCL. Now, before market came back into this OCL, what do? Go to the 15 or 5 minutes time frame and look at, did the market break structure right there? Did the market give you a heavy break of structure right there? Let's look. Which kind of place be this? Where did the entry come from? This is where the entry came from. This is it. Market came down, trigger from here, and then went up and take out this external liquidity. So if you take a look, market break structure right here. And then after the break of structure, market give us a model for drop down into this. This is supposed to be your entry, but you have to do a little bit of refinements. Then the market went to take profit. So whenever a storyline has already started, what I'm trying to explain is whenever a storyline has already started, you can look for any of the models, depending on how you use your brain, and then you can capitalize on it. Very simple. Like I said, I don't know how well it works on other pairs, but I'm very confident on gold and S&P because I've seen it happen consistently, right? So a little bit of S&P. I used it for the teaching yesterday if you want the video very well. Now, let's say this storyline has already started without all of us. I'll explain how the storyline started. Now, the storyline started based on this rejection right here. But then, yet on Friday, the candle opened up. Remember, we are looking for a rejection that day. I want to see the breakout that day. That's how I established my storyline. This one went up. Immediately it went up, it came into this key level. I respected this key level without coming back to this. After that, we go into the H4 time frame immediately, and we're looking for what? A breakout. Market respected it right here. And where did the market break out? Below here. This is where the breakouts happen, right? Now, immediately after the breakout or before the breakout or anything, let's say we want to use the 1 hour time frame. Is there a breakout on the 1 hour already? Yes, there's a breakout on the 1 hour already since around display. There was a breakout. So we are going to be very sure already from there. Market continued dropping without pulling back. Now, what happened right here? Market give us a pure model 3. It was dropping down, just drop a bullish and a bearish candle. Give us the fair value gap we are looking out for. And then the sell came in from here. That is why you need the models. Now, immediately you see this, you are not interested in waiting for the market to come all the way here or forget it. For now, capitalize on this one first. Later, we'll go discuss. Now, the same thing after this model 3 has played out, went to your TP. The market disrespected the swing low right here. After disrespecting the swing low, come to the 15 minutes time frame. You see what the market has been doing. Try to play an SLE. Market has been consolidating around there, or at least the market has moved, and you are targeting this. What is all this? The simplest approach ever to the chart. If you understand each and every information I'm passing, we are not supposed to struggle with anything this year on the chart. Okay, so I think that's going to be all for today. If you have any question, drop it on the WhatsApp group or on the Telegram group, anyone. I'll try to pay attention. So thank you all, and use this information for yourself. Peace out.